What's up, you guys? It's Rob here. Today we'll be going over ticker symbol AMC. The elephant in the room, yes, AMC did not have the best day at all. It was down 9.91%. The bears and the shorts definitely drove the stock down as much as they possibly could. However, us apes did step in and essentially say enough is enough around $12, and we fought for $12, and we actually closed the stock at $12.64, which is good. This shows that we're having a nice healthy pullback from $15.80 or $14.67, whichever your preference is, down to $12. And what this is doing is it's setting us up to consolidate and then setting us up for our next move in the upwards direction. So this is actually far from over. And if anyone tells you that this is over, they're a silly chicken and they're just spreading a bunch of FUD. If you guys can, do me a favor, hit that like button, hit that subscribe button, make sure that you ring that bell for the YouTube algorithm, because it definitely does help me out a lot with the YouTube algorithm. Now let's go ahead and dive into the charts here, and we'll cover the 1 minute, 1 day time frame first. All right, so we're taking a look at the 1 day, 1 minute time frame here. And really the thing that I have highlighted is I have what's called the Keltner channel highlighted, and I have it set as a multiplier of 3. And what this takes a look at is the 3 standard deviations of moves between the upper band and the lower band. And then you have the center band here, which is really taking a look at your EMA. And what we're seeing here is in the morning, we have a very volatile move to the upside. We actually had our intraday high of 1331, which is really nice to see. And then we had a pullback and we saw the short step in. And you can see really where the shorts step in, because if you touch outside of the Keltner channel, it's considered a really volatile move and you should see a push in the opposite direction. So if you're pulling down, you should see a push upwards. If you're pushing upwards, you might see a nice pullback. But really the thing that I want to highlight here is we found support at $12.35, and we touched this several times today and validated it as a level of support. We did break through it at the end of the day, and we did touch $12.14. Not technically a bad thing, because what we're seeing is we're just seeing a 50%, roughly to 61.8% retracement here within the stock. And then we have a really nice rally here into the close. We did trade below the VWAP, which stands for the volume weighted average price. And this is an indicator of if it's bullish or bearish momentum. If you're below the VWAP, it's considered bearish. If you're above the VWAP, it is considered bullish. When you're above the VWAP, you more than likely made money on your purchase today versus when you're below the VWAP. Keep in mind, this does vary. But let's go ahead and hop out here to the 1 month, 1 hour time frame. And the thing that I want to point out here right away, and I'm going to hop right on it, is the RSI. The RSI is oversold here for the majority of today's movement. And what this tells me is that the stock is worth more than $12 according to this indicator. And we need the buyers to step in. Well, the buyers stepped in and we closed the RSI sitting here at 37.50. So we are actually still borderline. We can easily become oversold again tomorrow if we see any push to the downside. Now, I really want to point this out here is because every single time we had ourselves test the oversold territory, we've had some form of bounce. Now, the key thing that I want to look at is I don't want us to fall essentially below our high here of, what was this? About 1225 is, let's say. I don't want us really to fall below 1225 tomorrow, because if we fall below 1225 tomorrow, that means we're still in that retracement mode, and we're going to start pulling back even more. And if we can really find support here at $12 and stay at this point and consolidate and then make our next move upwards, what we're doing is we're setting higher lows, which is exactly what we want to do. Is we still want to have that bullish momentum from a macroscopic point of view. The other thing I want to point out here is the MACD, very bearish, starting essentially when we had our high of 1580 all the way in today. Now the MACD is actually about to converge with the signal, and hopefully what we'll see is the MACD step above the signal, and we'll see the divergence of the two, and we will be back in bullish territory, which is something that I'm going to be looking for. Also, when we hop out here to the year-to-date time frame and take a look at the day scale, we're still sitting perfectly fine. Yeah, we did technically break that trend line, but the huge thing that I really want to take a look at here is we're still riding an ascending, we're still technically riding an ascending level of support back here. Yeah, we did have a pullback it's perfectly healthy to have a pullback. The next thing that we really want to do is validate that this is a healthy level of support at $12 and consolidate on it. And what this will do is it will form a new ascending level of support for this stock. Now, the thing that I don't want to see is us continue to go downwards, because then we're going to see a descending level of resistance. So keep that in mind. The other thing is we were definitely overbought on the RSI on the day time frame. So seeing a pullback here to 60 technically is not a bad thing. So from a technical analysis perspective, today was actually probably a good day for the stock, just to bring those indicators back down, hit the reset button on them a little bit. We still have a very bullish MACD down here, which is good. It doesn't show, these two don't show any sign of converging anytime soon. However, we need to keep in mind that this can quickly change with a couple of red days. So that's the reason why I'm saying we need to respect $12 and stay at that $12 support. If we can stay at that $12 support, I think we're going to be sitting rather pretty to make our next bullish move to the upside. So really, looking at tomorrow, I really want to see us respect $12 and not dip below $12. If we start dipping down below $12, better be quick and we better get back above it, because if we close down below $12 tomorrow, I'm going to start scratching my head and saying, are we going back and seeing $10? I really don't want to be going back and seeing $10 from our high at $15.80. Would not be a good move for the stock in my personal opinion. Now, all right guys, so we're going to cover the short interest through Ortex and Stocko Tracker 2. And the huge thing that I want to highlight here, and this is the reason why I say it's not over, is 4.84 million shares were borrowed. 4.84 million shares were borrowed. Yes, we saw a negative borrowed change of roughly 10 million shares. However, our shares alone still sitting at 132.67 million shares. Our free float still sitting around 27% of the current free float. Our days to cover still higher than what they were in January. Free float still higher than what it was in January. So if we squeeze back in January, we're still definitely in a squeezable position now with all these indicators. And that's the reason why I still believe that this can squeeze, is because everything lines up and is higher than what it was in January. If things get lower than what it was in January, then we're going to have a different conversation. Also, we would have a different conversation if our shares on loan all of a sudden went down to 25 million and the price movement didn't change at all. The other thing to take a look at here is within Stocko Tracker, 4.5 million shares available to borrow of AMC. 17,560 short ETFs are available out of 372,000 total short ETFs. So there is an incredible amount of short ETFs that are either A, used, or B, on loan. So you got to keep that in mind too. And if we take a look at the borrowed shares here, between 1432 and 1448, we saw a net borrowed change of 1.2 million AMC short shares. And this shows that people are still shorting this stock. This is not a dead cat. This is far from a dead cat. And anyone who tells you it's a dead cat is nothing but a silly chicken, in my personal opinion. Now, let's go ahead and hop back over here into Webull, because what I really want to cover is the options chain, because the options chain has some really interesting factors here. Now, the huge thing within the options chain that we want to take a look at is that there's interest for multiple days. Not multiple days, multiple weeks. So we have 24,000 here at the $12 strike. At $13, we'll put another 20,000 contracts roughly in the money. At 14, it's another 26. And then at 15, it's another 28. You saw really how hard they were fighting the essentially flushes down the toilet once we got to 1467. So we know $15 might be that max pain region of where they can't take it anymore, and they're going to have a nice lovely call from margin saying, hey, you guys got to cover, or you got to fork up some money kind of thing. Now, the thing that I really want to take a look at is 18th of June. The 18th of June is a very interesting to me, because the amount of open interest that is on this, and I'm going to slowly scroll through here so you guys can take a look at it. Feel free to pause the video too. The huge thing that really throws me off and I look for is just really non-normal open interest within certain stocks, and it's really where I look for, because it might be a telling sign of what's to come. And if you take a look here at $40 on June 18th, there's 126,231 open interest contracts. Now, keep in mind, that each person, if they wanted to open a contract, had to pay between today $49 and $50, and there was roughly about 19,000 contracts added to this position. So 19,000 contracts at $50. $50 for the premium, $40 strike. This is definitely something that's a little bit of an anomaly, and I'm kind of looking at and paying very close attention to, because if this continues to get stacked on, what this is telling me is that someone is preparing for something to happen, and we're going to be moving to the upside. So that personally is my opinion. Like, this tells me, and almost kind of gives me like a confirmation bias of the squeeze is still very likely, because there's people willing to throw $50 at a $40 strike in January, not in January, in June, essentially a month from now, and really hope that it actually hits. Now, keep in mind, I'm pretty frugal with my money, so $50 to me seems actually like a lot of money to put on essentially a dart throw and hope that it hits. But if it does hit, then you make a lot of money. But really, the thing is, this is not normal in my personal opinion, and still tells me that the squeeze is on. If you guys do have any questions or anything like that, feel free to drop down a comment in the comment section below, and I'll see you guys in the next one. Peace.